Hello, folks. It is Sunday, October 8th. It's about 3 o'clock in the afternoon on the East Coast of the United States. In this video, I am going to talk about gold. That's right. Let me share my screen and we'll jump right in here. All righty, gold prediction. So we got a new conflict in the Middle East. If you're unaware, Israel has declared war. I'm not sure. I'll have to look. I'm not sure exactly who they have declared war against. I would guess that it's Palestine. One of the headlines, one of the things people are talking about, biggest intelligence failure in Israeli history. And I would just suggest that before you buy into that one, you give some thought to Mossad, the Israeli intelligence agency, and the fact that Palestine, Gaza Strip, essentially an open air prison. And so if you think that anything can happen in an open air prison without the prison guards being aware of it, you're probably not familiar with prison. But anyway, so just give this idea some thought before you jump on board in supporting that belief. This was Dr. Ron Paul speaking to Congress this morning. So evidently the Congress critters are in Washington or wherever it is they're currently gathering. Some people question whether it's actually in Washington these days. But Dr. Ron Paul was encouraging them to give some thought, serious consideration before they pass legislation related to current events in the Middle East. And so this is not Brian pulling this out of his tuchus. It didn't come from some blogger. This is straight from the mouth of Dr. Ron Paul, one of our straight from the mouth of Dr. Ron Paul. Hamas was created by Israel to counter Yasser Arafat. And so one of the things that we'll be hearing, today and going forward is that Hamas has attacked Israel. And so just, again, be careful picking sides. One of the things they want us to do right now and in general is pick sides. Picking sides is part of the divide and conquer strategy, which is one of the oldest control techniques on the planet. If you can divide a population, create infighting amongst groups, it's much easier to control that population. And so just before you pick sides and say, oh, I'm for Israel, oh, I'm for the Palestinians, just give some thought to picking sides is exactly what they want us to do. The side that I pick is for the side of humans living on planet Earth who are tired of being controlled by the 1%. That's the side that I'm going to pick. And I'm going to be very careful about the news, and I'm going to put air quotes around news, that comes out about the events currently happening in the Middle East. So let's continue. So Hezbollah has claimed or is being blamed for this attack. And of course, in the West, it's believed or claimed that Hezbollah is supported by Iran and Syria. And note that that connection between Hezbollah and supported by Iran and Syria now gives the West cover to go attack Iran and Syria if they choose to. And so we may see, unfortunately, we may see events in the Middle East expand in coming days and weeks. Just as an example of some of the kind of rhetoric we're going to hear from the same people that we always hear this kind of stuff from. So this is Nikki Haley. This was not just an attack on Israel. This was an attack on America. They don't only hate the Israelis, they also hate Americans. And, and it's just the one track record these people are, and she's one of the worst of them. But anyway, former ambassador to the UN, she's already come out and said this. We'll hear more stuff like this from the typical people that say those kind of things. Inflammatory statements that allow them to further their agenda. Some of the possibilities about why it happened, well, isn't it interesting that the counteroffensive in Ukraine is essentially over? It's been going on for 4 months. Ukraine has conquered exactly, well, it's not exactly zero. I think they've reconquered 1% of the land that Russia took. 1%, I think Ukraine has regained in 4 months. The numbers, somewhere between 70 and 90,000 Ukrainian soldiers have died in that 4-month period. Think about that, 4 months, 70 to 90,000 Ukrainian soldiers. What we lose in Vietnam? 68,000, I think, is the official number. And how many years were we in Vietnam? 68 through 74, isn't that like 6 years? So in 6 years, we lost fewer soldiers than Ukraine has lost in 4 months. So just something to think about. And then with the events in last week in Congress, we've essentially stopped, or, the Congress has stopped funding for the Ukraine conflict. They removed the Speaker of the House, and one of the candidates for the next Speaker of the House is adamantly against continued funding for this conflict. And so, anyway, quite possible that we are seeing the end of this situation. And so a new situation was needed. And isn't it a coincidence, an interesting coincidence that on Saturday morning, we've got a new conflict to take the place of the previous conflict. Just a coincidence, I'm sure. And then I want to draw your attention to a potential connection to the Belt and Roads Initiative. Let's look at a map here. So here's Jerusalem, Israel. There's Iran, big country. Iran's a big country. And then let's look at another map. So this is a map of the Belt and Road infrastructure. And in particular here, these are railroads. So in the red and white lines, those are railroads. One of the things that China's trying to accomplish with its Belt and Road Initiative is to replace or supplement the water transit routes for getting supplies around the world, around Asia and to China. Remember that China is almost entirely dependent on imported petroleum. And so when you look at who controls the waterways at this point, you have to acknowledge that it's the United States. Now, we could talk about hypersonic missiles that both Russia and China have. Russia's actually on their second generation of hypersonic missiles, and the US is hoping to have their prototype hypersonic missiles done by the end of this year. And so anyway, the US is far behind Russia and China in hypersonic missile technology. And that technology essentially makes all of the US Navy boats targets. And Colonel Douglas Macgregor says it exactly that way, is that if you look at the US Navy, and this is actually true for anybody's Navy, basically two classes of ships. We got submarines and we got targets. And so yes, we can acknowledge that the United States controls the seaways, but we also have to acknowledge in the same conversation that Russia and China have technology that make all of those U.S. ships basically floating targets. And so if they chose to, China and Russia could change who controls the seaways. But instead of going to outright conflict, and in my opinion, let me just state it here, I don't believe that either China or Russia is interested in being in conflict with the rest of the world. They want to do business. China, it's funny that we call Chinese communists, and they're better capitalists than we are. And Russia, there again, they've shown absolutely no interest in controlling the world. That was the Soviet Union, not the, what is it, Republic? No, Russian Federation, RF, the Russian Federation. The Russian Federation has shown zero indication that it has an intention of controlling the world. There is a Western narrative that would suggest that Russia wants to control the world, but again, that's just narrative. Anyway, back to this map. This is the Belt and Roads infrastructure that China is trying to build, in part to reduce or eliminate the dependency on the sea lanes. See, all of this, these are overland routes. And so if China, this is China over here, all of this territory, Russia's up here, here's the Middle East, there's Tehran, so that big chunk is Iran right there. This is the Mediterranean Sea, Israel right in there. And so these red rail lines, this is China's infrastructure, the Belt and Roads infrastructure, for moving goods overland so that they don't have to mess with the sea lanes. Well, one of the things that has been accomplished with the conflict in Ukraine is that these northern overland routes, they haven't been stopped or removed, destroyed, but it's hard to obtain insurance. Because of the conflict up in this part of the world, insurance carriers are reluctant to provide insurance to the cargo carriers. And so that's put a damper on transit through these northern rail lines, which leaves, as far as routes coming out of China, coming out of Asia into Europe, that leaves this southern route, which goes through, that's Turkey, there's Tehran, Iran and Turkey. And so anyway, one of the things that could be accomplished with a conflict in the Middle East is that you put a kibosh, basically you do the same thing to the southern BRI railway system that has occurred up here with the northern route, is that, insurance providers won't give coverage for cargo transiting these southern routes because they go through conflict zones. And so if you can successfully sever both the northern and southern BRI routes, well, you've isolated China from these overland transit routes. And so anyway, there's potentially a bigger picture going on than just a conflict in the Middle East, that current events in the Middle East could be playing into the strategy of isolating China, which, of course, that's one of the things that the West is up to right now. So anyway, let's shift now and focus more specifically on gold, but I want to talk about gold popping higher because of this new conflict. So that's one of the things that gold does for us, is it is a protection against geopolitical turmoil, which that's exactly what's happening in the Middle East this weekend, is geopolitical turmoil on a big scale. I mean, In the headlines, they're talking about this current conflict is the biggest thing that has happened in the Middle East since 1973, which offhand I think was the Yom Kippur War. Maybe I don't know, but anyway, biggest thing that's happened there since 1973, which is 50 years exactly. Yeah, 50 years. I think that was Yom Kippur. Yeah. Anyway, and so we'll look at how gold has. Well, let's do that now. So on this chart, I picked the first two events that came to mind for me. So back in January of 2020, there was an assassination of Qasem Soleimani. I'm probably horribly mispronouncing that. And that event kicked off a rally in gold. It was punctuated by the big scary plunge. And this was, March of 2020, all of the financial markets headed dramatically lower. And so we see that here in the gold chart. But this event started a big rally. I mean, yeah, you could argue the rally actually started back here, but coincidentally, we had this assassination and gold went on and did that. If we focus on those, just those few price bars, if we zoom in, we can look more specifically. What are we in? We're in the daily time frame. So here was January 3rd. That's that big price bar there. And so for the next next 3 days, gold popped significantly higher before pulling back. And I think with this big pullback, that was the acknowledgement that this assassination was not going to lead to widespread conflict in the Middle East. So when that realization set in, gold did a big pullback, and that's what we see there. Let's look now. This is February 24 of 2022 when Russia entered Ukraine. And so let's zoom in a little bit here. That's that big doji candle there, big upper wick and a relatively large lower wick, big doji there. And then we got a continuation of this rally. Gold went considerably higher after that Russia going into Ukraine. See, I'm not even going to call it an invasion. That's not how I see it. But we're not going to go into that in this video. And so anyway, I just wanted to show you not unexpected that we will see a reaction in gold based on this weekend's events. So when gold futures start trading this afternoon, I think it's 6 o'clock, won't be surprising to see gold react and pop higher. And of course, coincidentally, it looks like we got at least a temporary bottom on Thursday and Friday. We can see here, this is Thursday and Friday. This is COMEX, so gold futures, the paper markets. We got a bottom on Thursday and then a pop on Friday. What is that? 0.7%, $13 move on Friday. So nice move on Friday. Notice that MACD had reached a very oversold level, going all the way back to this triple bottom in September, October of 2022. And I'd also point out that this bottom, even though we got this big drop in gold, this is a higher low than we reached here. And so from a technical perspective, we still have a series of higher lows. That was our low there's a higher low. This is a higher low. So technical uptrend, it's more obvious in the higher time frame charts. But anyway, uptrend, a little bit of an uptick in energy there. So let's keep rolling. Gold in the weekly time frame. That was, oh no, this is gold in the daily time frame. This is spot gold, so not futures. And the reason I'm showing both is there's about, let's see, where are we at with 1830 versus COMEX gold 18, well, they're pretty close right now. So 1835. There was a divergence between the two prices, and they've kind of come back together now. So basically, it's whichever chart you want to look at. And so anyway, we can see again bottoming on Thursday, Friday, pop higher, support or potential support along the lower median line of this shift pitchfork. A little bit of a rise in energy, MACD very oversold. So anyway, after this big move and becoming oversold, we're due for some kind of a bounce, just as a counter trend rally, if nothing else. But wouldn't be surprising to see more than just a counter trend rally, in particular, given the events of this weekend. So here we are in the weekly time frame, more of the same. You know, there was our low in mid 2022, higher low, higher low. Note that MACD is in bear mode, which would suggest that the primary trend remains to the downside in this time frame and still on a sell signal. So, and I guess we could talk about last week's candle, suggestive that we could have had bottoming just because it's got that lower wick. I wouldn't call it a doji, but there is a lower wick there that is, well, what that lower wick tells us is that gold pushed all the way down to the low there. So gold pushed down to the low was 1810. So gold pushed all the way down to 1810, and then buyers came in. Buyers came in at that level, 1810, and pushed gold back up. And so gold closed higher than that low. Let's keep rolling. OCD, let me save that chart. Here's gold in the monthly time frame. Fibonacci retracement, we can see that we've got a 62% fib retracement. So, you know, that's a common level where retracements will reverse and head back in the other direction. So potentially gold could head higher from here again. MACD in bull mode, suggesting that the primary trend in the monthly time frame is upwards, albeit we're currently on a sell signal. Energy about mid-range. Let's keep rolling. This is gold in the quarterly time frame, which just it sheds more light on, you know, we've got this triple top currently in a pullback from that level. Got a ways to go before we might find support again. If gold wanted to head lower, you know, that's all the way down at 1700. But that's not what I'm expecting to happen. MACD is in bull mode, again, suggesting that the primary trend is upwards in this time frame. If we want to look at this whole thing here is a continuation pattern, a flag pattern, suggesting that, you know, higher prices remain ahead. Basically, this is the halfway marker between here and the ultimate price target, which is up, it's like $2,500 an ounce. Let's see, so silver, this is COMEX, so the paper silver, the futures. One of the things in Andrew's pitchforks, one of the ways you can see what can be happening with price is that price does not reach its next target. And so this is an example of that. Let's zoom in a little bit here. So in Andrew's pitchfork, anytime price penetrates a median line, so for example here, silver has penetrated through the median line of this Andrew's pitchfork, and when it does that, the next price target becomes the next median line, which would be this lower median line. Well, notice that price did not reach that target before it reversed and headed higher. And so now it's back challenging the median line of that fork again. And so this is a sign of strength. The fact that silver did not reach this lower median line can be seen as a sign of strength from an Andrew's pitchfork perspective. There's also just tangential, if you're into technical analysis, there are 5 expected behaviors when you're dealing with Andrew's pitchforks. What we are currently seeing here is one of the 5 behaviors. This is a zoom and retest where price has zoomed through the median line and is now retesting the median line from below. So that's a zoom and retest. That's one of the 5 behaviors. So anyway, silver has headed lower, still in a technical uptrend. Low back in mid-2022, higher low. MACD oversold, energy turning up slightly. Let's keep rolling. This is a daily time frame on spot. Potential support level at the lower median line of this modified shift pitchfork. Oh, note in both cases in this daily time frame, moving averages are in negative alignment, suggesting that energy is to the downside. MACD's in bear mode, suggesting that the primary trend is to the downside. So silver not looking very good, but silver will follow gold. And so if gold heads higher this coming week, silver is almost certainly going to follow. So silver in the weekly time frame, again, potentially a low last week based on the lower wick on that candle. We'll see what happens going forward. MACD in bear mode. Energy is low, so nothing exciting there. Monthly time frame, basically just a bunch of sideways. MACD in bull mode on a sell signal, on a new sell signal. Nothing exciting there. Mining stocks, based on my proxy, this is GDXJ, the Junior Miners ETF. And just as a reminder, that this is a misnamed ETF. At least 5 of the components of this ETF are majors. They're not junior miners in the least. They're $1 billion or more in market cap, which is hardly a junior miner. Junior miners, typically, I think of them as being, they're 300 million, maybe 500 million. But certainly when you get to $1 billion in market cap, you're not talking about junior miners anymore. And at least one of the components of this ETF is $5 billion. So anyway, a misnamed ETF. I use it as my proxy for the mining sector. Here in the monthly time frame, notice that we're currently on potential support at this, it's the lower boundary of an upward sloping channel. So potentially a place for the mining stocks to reverse and head higher. MACD in bear mode, energy about mid-range. Same vehicle in the weekly time frame. Potential last week. This actually is a doji candle in Japanese candlestick terms. I would suggest that that is bottoming candle, excuse me, because of the long lower wick and the thin body. We could refer to that as a, what do they call that? Morning star, I think, is the pattern there. Anyway, it is a bullish pattern in Japanese candlestick terms. Notice also that we are at the lower median line of this shift pitchfork, potentially providing support. MACD in bear mode, energy very low, a lot of selling volume. And of course, we can see that in price with this pullback and a rise in selling volume. So the real positive here in this chart is the bottoming candle and potential support along the lower median line of that fork. Here's GDXJ in the daily time frame. Again, as I was explaining a few minutes ago, this vehicle failed to meet or reach its next target, which would have been the median line of this Andrews pitchfork. And so potential sign of strength that it did not reach that target before reversing and heading higher. Now, of course, now we've got price pushing up into this support resistance zone. You know, if we look, clearly it's acted multiple times as resistance, multiple times as support. And so anyway, a fairly well-defined support resistance zone, probably going to take a little bit of work to get through that area. But notice also that MACD is very oversold and appears to be turning upwards, and energy rising. So anyway, encouraging sign there. Moving averages in bearish alignment, 50-day moving average below the 200, 20 below the 50, that's bearish alignment. Now we're at the US dollar. So this is daily time frame. Potential, the dollar could be starting starting a correction. We'll have to see. Obviously pulling back towards the 20-day moving average, which has been providing support. You know, we can see it support here, support twice there, you know, support there, and potentially again provide support. But maybe it doesn't. And we can see just simple trend line here. The dollar is sitting at that trend line, potentially will drop through. Based on MACD, which is extremely overbought at this point, going back all the way to the start of the year. So, and I've explained this numerous times that, you know, MACD is not a bounded indicator, but these prior highs and lows, oftentimes they will act as boundaries or bumper guards, if you want to look at them that way. Where price reverses. And so anyway, based on MACD, the dollar is very overbought at this point. But, you know, the moving averages are in bullish alignment. We're in a technical uptrend. MACD is in bull mode. You know, there are certainly bullish factors. The dollar could easily continue higher from here. We'll just have to see. Again, MACD in bull mode on a buy signal, energy very elevated. So here in the weekly time frame for the dollar, you know, this is bullish. 10-week moving average above the 40-week. You know, you could look at those last two candles as being toppy because of the upper wicks. But in general, this is this chart is more bullish than bearish, in my opinion. So we'll see. Here's the dollar in the monthly time frame. 50% Fibonacci retracement of this down move. So big move to the downside and currently in a bounce. So maybe this is just a counter trend rally and prices rolling over to head lower. Again, we'll just have to wait and see. MACD in bull mode, which suggests that the primary trend remains to the upside, energy rising. So again, more bullish than bearish in my assessment on the dollar. And as I've said before, because the dollar is the world's reserve currency, and most of the not only commodities, but financial vehicles are denominated in the US dollar, even as the global financial system collapses, there is likely to be demand for the US dollar as traders and institutions unwind their positions. So it would not be surprising to me to see unexpected strength in the US dollar, even as the world's economic system falls apart. Richard Russell referred to this as a synthetic short. He talked repeatedly about a synthetic short in the US dollar because everything in the world is priced in dollars. So currently that is becoming less so by the day. Got couple of charts, just gold and other currencies. Gold in the Australian dollar, broke out to new all-time highs back in March of 23, doing a sideways consolidation at this point, consolidation at a high level. MACD in bull mode, suggesting that the primary trend remains to the upside. Energy is very elevated. So in contrast to gold in the US dollar, new all-time highs in Australian dollars and a consolidation at that level. Gold in the yen, in my opinion, Japan has been a 30-year experiment in Keynesian economics. They've tried price control or curve control, actually. They've tried to control their interest rates by selling printed fiat currency and buying their debt instruments. So anyway, Japan's an interesting case to look at from a Keynesian perspective. And notice that gold and yen, new all-time highs, and again, kind of in a sideways consolidation at this point at a high level, basically consolidating at that level. Gold in the Turkish lira, again, another fiat currency that is failing dramatically, and interesting to see how gold is performing in that failing fiat currency, obviously new all-time high, and again, sideways consolidation. So anyway, that's gold. Main point here is, would not be surprising to see gold pop higher this evening when the futures markets open here in a couple of hours. That rally could continue on into the week. Seasonally, we're at the point where gold could rally going into January. That's basically what seasonality supports at this point in the precious metals, is higher for the next couple of months. Based on the charts, the gold and silver both are very oversold. They're ready for counter trend rallies, at least, if not substantial rallies to the upside. Obviously, we've got geopolitical events that are going to take the headlines this coming week. So it'd be interesting. It's going to be an interesting week to see what happens. As I have been doing in the last couple of videos, I encourage you to protect your wealth, buy some physical silver and gold, protect your tax-advantaged retirement accounts. If you haven't already done so, give some consideration to moving at least part of your tax-advantaged savings into a precious metals IRA. Now, I'm always, when I give that advice, I always give it hesitantly, and I'll tell you why. It's not the ideal way to own precious metals, the ideal way, in my opinion, to own precious metals is that you go take money out of the bank and you take your cash down to your local coin dealer and you buy physical silver and gold and you tuck it away wherever you feel like you can securely store it. That's the ideal way to buy the precious metals, in my opinion. When we're talking about your tax-advantaged savings, unfortunately, it is very expensive to access that money prior to retirement. If you try to pull cash out of your retirement savings, you're going to pay a 10% penalty right off the bat. Then you're going to pay income taxes on your withdrawal. The withdrawal will be counted as income, which may push you into a higher tax bracket. And then you'll be paying more taxes, not only on the withdrawal from your retirement savings, but on your income from whatever other sources of income you have. And so anyway, very expensive to pull money out of your retirement savings prior to retirement. And so the next best thing, and the only way you can protect your retirement savings with physical precious metals, is through a precious metals IRA. The real downside to doing that is that the IRS requires that a third-party custodian holds those metals. You can't hold them yourself. And so, there's third-party risk because there's that custodian involved. There's a third party, which brings risk into the equation. So although it is not the ideal way to buy precious metals, it's the only way to protect your tax-advantaged savings with physical silver and gold. And so anyway, with that said, in the description below this video, you'll find a link to Augusta Precious Metals. That's my favorite gold IRA company of the numerous companies that I've investigated. They appear to be the most focused on educating their customers. You can see that at their website. If you contact their representatives, you'll find that as well, that they will work with you as long as it takes for you to determine if a precious metals IRA is appropriate for your circumstances and your tolerance for risk. They will also, if you choose, have a one-on-one teleconference with you where you can discuss your unique situation with a Harvard-trained economist. That's Devlin Steele. He is full-time staff at Augusta Precious Metals, and he's the only that is the only gold IRA company that I'm aware of who has a full-time economist as part of their staff, much less Harvard trained. And so anyway, take advantage of that, get a gold IRA kit, find out if a gold IRA is appropriate for you, if that's something you're interested in. I'm going to end this video now. I want to go, I guess I'm a news junkie. I want to see what latest events are. I just encourage everyone, before you choose sides, give some serious thought to the big picture. What's really going on here? Who's in control? Who stands to benefit? Cui bono? I mean, that saying can be applied to just about any situation. Who benefits? And with that, I'm going to cut this off, and I look forward to talking to you again.